Good morning, everybody. Sound check 1, 2. Good morning. MS, what's up, brother? What was your name again? I feel like MS is not doing you justice. I think I'm not disputing your name or anything. I'm not trying to change your name, but just want to know if you're comfortable telling me. If not, that's cool too, because you're here quite often. I'll turn around and look in a second. Good morning, everybody. Welcome to our morning market update. I got a really good one for you today, and I hope you guys have had a great day. Good start to the day so far. We got a lot to cover. Let's jump into this update. So global equities this morning are mixed. Euro stocks is down 0.4%. ES is kind of flat. NASDAQ is sort of flat as well, but Europe seems to have a little bit more weakness. Dollar index slips under 100. We'll talk about why that happened with the job cut surge. 10-year yield is steady, and crude oil rebounds about 1% to 60.5. Bitcoin's up 1%, and Ethereum's up 2%, which is great to see some crypto up. I feel like since I've come back to this morning market update segment, I've always had to deliver the news that crypto is down yet again. So this is good. Good news to see Bitcoin up 1%, Ethereum up 2%. Let's jump into the first big segment of today's update. All right. There's a report called Challenger Job Layoffs. All right. And that report today came out. It is by a private company. So despite the fact that the government shutdown is now on the 37th and record day, all right, we still have data. It's just by companies that are private companies, not government sourced and released data. So that number, basically Challenger job cut layoffs. I'll talk to you about that, what it is fully in a second, but it came out at 153,000. All right. That's showing some cooling labor market momentum. Now let's dive a little bit deeper. That's 175% jump in month over month numbers. So that's a lot. That's the highest increase in 7 months. All right. And it signals some corporate caution. Then why is this interesting? Because the month of October is typically the first month where you start to get some more seasonal staff. And this is why, to me, it's particularly worrying. You start to hire more seasonal staff for an increase of demand into the holidays. And it's not just consumption. It's not just purchasing gifts for the holiday. It's also travel, it's hotels, it's tourism. People have extended time off from work and like to travel around the holiday season. It's really busy. And so it's kind of odd here to be cutting staff and not increasing. You would be holding on to your staff and hiring more seasonal temporary workers, but it's not the case. It's a little scary. Yes, online shopping has kind of replaced and taken over shopping for a lot of efficient people like traders. Well, I bet you the last thing a trader wants to do is be in a mall looking for gifts for people. All right, but that is not an efficient auction. All right, it could mean that the job market is cooling faster than expected. And even though, this BLS data from the government isn't available and it's delayed due to the shutdown, this report here is published by a company called Challenger, Gray, and Christmas Inc., which has tracked and announced job cuts since the 1990s. This isn't some little cute little institution with like boutique shop with 2 people. This is a major company that's been doing this for a long time. It's released on the first Tuesday of each month. And the reason that it normally hasn't got much attention is because we have a much more important number that would statistically and traditionally come out tomorrow, right? Which is Friday. First Friday of the month is what? Non-farm payrolls. The jobs report, quote unquote, the one the Fed relies and looks towards. But we're not getting that tomorrow, all right? So this is why it's important. And yeah, now you know. Okay, markets now are pricing a 65%. I got a notification that threw me off on my phone. Even though I'm on perma DND, I still get notifications. I got to look into that. Markets now price a 65% odds of a December Fed cut, which it's still greater than 50%. All right, it's still kind of more into the foregone conclusion territory, but it's dropped from 70%. So we're kind of slowly eroding the expectations of a December rate cut, which on November 6th, today being November the 6th, and that meeting being in December, there's still a lot of time to erode that number further, to maybe not even get a job cut this December, or not job cut, to get an interest rate cut this December. All right. ISM ADP numbers are fading as well on the strength So, that's where we are with this. So this is a bit of a news point for the market. In other news, shutdown still unresolved today. Flight cuts, like actual flights, are being reduced, and that's going to begin Friday if no deal is reached. All right, that's kind of troublesome because I am planning to travel for the holidays. It's more troublesome because my family is going to be taking the flight. I'm going to be driving a car, and that kind of. Anyways, on to the next segment. Big Short 2.0. Look, that's kind of fear mongering a little bit for the headline. All right. That was originally the headline of this update, Big Short, all this crap. But I'm like, this is too much to work people up in the morning. Let's skip it today. Let's just go with the more neutral headline. But Deutsche Bank is betting against AI. Whether you call it the Big Short 2.0 or you don't, wait till you hear this. Deutsche Bank is reportedly shorting AI stocks to hedge billions of dollars lent to fund data centers. Now, you got to think about this because Deutsche Bank was selling insurance on the housing market before it collapsed. Anyone that has watched Big Short was the character played by Ryan Gosling. I forgot his name. That was the dude doing the job of the dude doing this job right now. So they're starting to get worried. And it's one thing to have, I've talked about this for a while on the AI thing. I don't think it's a bubble. I don't think AI is going to disappear. I think AI is here to stay forever. How we use it is going to change. 20 years from now, how AI is going to be implemented, nobody knows. And this is why it's so hard today to bet on stocks, because we don't know the future. Could it be a full dystopian AI taking over future? Yes. Right? The stock prices will then explode. We're just getting started if that's the case. But will money matter then if labor doesn't? If labor gets replaced and outsourced to AI, will money really matter? Is a question I got to ask you. All right. Anywho, back to facts. The loan. So think about being Deutsche Bank. Okay. I'm not saying this is a random guy. What I'm saying is this isn't a random guy in the bedroom saying AI stocks like me. Right now, our office is being worked on. But it's not just one person. It's an institution who's got hundreds of billions of dollars of loans to these AI and fund data centers. And they're saying, I'm getting worried about my money. And they won't ever admit that, but they did with their action. They won't ever give us the lip service of the boardroom meetings and say, holy crap, guys, we got a lot of exposure to this industry. We've learned a lot. And if anything happens, this is going to be '09 all over again. Because I think companies in today's day and age are a lot more cognizant and mindful of what's happened, because it's been recent. Like, it's a recent thing that's happened. It's still in people's lifetime where it's the same executives in '09 that could be in leadership here. So we're looking at this as Deutsche Bank, and we're saying, we got too much exposure. Let's short some of these stocks for protection. All right. And Deutsche Bank backs projects tied to Microsoft, Google, Amazon. So they're looking at either shorting stocks or some synthetic risk transfers, which is kind of like poetic because it rhymes, not rhymes, but it's reminiscent of the 2008 CDOs, collateral debt obligation. All right. This is one area to look at. Yes, Deutsche Bank is concerned. I don't think it's over, but I think there's like some skepticism and worry starting to show up. So just keep that in mind, because this is the sector pulling the whole market up right now. If you don't know that, now you do. It's all AI, it's all chip makers. This is a tech-fueled optimism rally to the upside. The market is not a reflection of the economy. If you ever ask somebody, how's the economy doing, and they go to look at the S&P 500 chart, run away from that person. If you ask somebody, how is the economy not doing, tell me the opposite of what the economy is doing, and they pull up the S&P 500 chart, follow that person. That's your new mentor. That person knows what they're doing. All right, they're completely and oppositely and negatively correlated and detached. It has nothing to do with one another. There is a time when I used to trade where the two of them were synonymous. And it meant good market data, great. It's great for the economy. It's great for the market. The two moved in tandem. Not anymore. All right. Quick read on the options flow. And then we're going to turn around and do the trading plan real quick. Call wall sits around 6,900 to 6,920. All right. Heavy interest also near 6,875. This is for the S&P 500 futures. Put wall 67.25 to 67.80. All right. At current price of 68.40. we're sitting right in between those zones. So we're going to have, some balanced positioning here of gamma. Now, you got to remember that when the markets move through these levels, the gamma gets readjusted by dealers and then a new range gets formed. So we're almost always sitting in between the range of gamma. But you should know these levels for resistance and support. Let's turn around. Let me get some comments here. Let's turn around and let's look at the screen and build the rest of our trading plan. Blah, blah, blah. Michael, yeah. JRAD, Michael Burry's one of the guys that's kind of leading the charge. His 13F showed that 70% of his holdings that were added were options positions and shorts on AI. So that's the other reason, I guess, they called it the Big Short 2.0. I didn't come up with that terminology. It's very alarmist for my liking, but it was the media. Like, I copied the headline. I liked it, but I didn't want to lead off with that. But yeah, Michael Burry's a big advocate for it. He loves to go in social media hiatuses and come back and then panic and worry about things. And he's not as right as the movie made him seem to be. Like, he's called multiple things that haven't panned out. So what I'm saying here is nobody can call the top or the end of a bubble, because if they could call it, if they are calling it, chances are they haven't bought it yet. Therefore, it's not a bubble. It's going to be a bubble when the people calling it give in and just buy the damn thing, and the top is in, then run. All right? But if there's still haters on the sidelines, it's not a bubble territory, but I do think it's overdone. I think it's overcooked. Let's have a look at some of these levels. Yesterday, I told you that, yesterday, what did I tell you? Yesterday, I told you that I thought we were friends. No, I'm just kidding. We are friends. Okay, yesterday I told you I thought this overnight move lower that reversed on overnight action, right? Because this is not yesterday's session, but the prior day here. But I said, hey, look, this sell-off that reversed, I think is going to be the start of a bullish run for the U.S. session, because this just shows you it wiped sell-side liquidity and it recovered within the overnight session. When the volume comes in, they're going to look at that as a bullish sign and start buying into the auction. So we opened up. We moved, I don't know, a couple, what is the low? 89 from a 95. 6 points. We sold off 6 points, and then we rallied 70 points almost. All right. So, look, yay, I was right. I can go on YouTube and say, woohoo, I called it right. Guess what? I had a down day. I lost $300. That was the net total. So, yeah, I'm keeping it real with you, right? Like, when you look at somebody doing analysis and you're like, their analysis is so good, doesn't necessarily mean they're making money. All right, doesn't mean they're a good trader. It means they're a great analyst. And to be a good trader, you first have to be a good analyst, and then you have to become a good trader, right? This is what people don't realize, is that you can't, if you just stop at having good analysis, then you're an analyst. Fantastic. All right, so I was a good analyst yesterday. The trading part of me, for some reason, didn't pan. I'll tell you why. I had the craziest pattern, my textbook A+ setup that popped up yesterday. I was over the DOM, the price ladder, looking to scale into it, buy a decent chunk, one and done trade. Because when I see this, I do it with confidence. I don't even think about it. This is the trade I wait for. All right. I see my A+ setup. I'm ready to load up. And then 9:45, you have PMI. 10 seconds before that release, the guy goes in the news squawk. He goes, just 10 seconds to news. Just the most unenthusiastic announcement. 10 seconds to Chicago PMI, or whatever the report was. And I'm like, well, I can't just gamble here. I had to cancel it. So I canceled my setup and my orders to buy. And the news comes out and shakes out the market. Order flow setup's no longer there. And I'm on the outside looking in, and I missed that one. And oddly enough, it would have worked anyways, but I don't care because it was news. So if you have a position, an A+ setup, and news is about to come in, and you just start crossing your fingers and hoping to God, it's not going to work in your favor more times than not. Like, news is a significant change of event and the significant change of the price auction in the market that you have no control over. So leaving a position there is gambling. That's where trading turns into gambling. All right. So anywho, it rallies. It just explodes higher. I would have been on that train. That's what I was looking for. What I was looking for happened. But I had to cancel my position. Okay, so then what did I do after that? I kind of went in a little bit into taking lower quality trade setups. And I couldn't help but feel that I was doing it to sort of emotionally close out the hole that was left in my heart from that missed setup. You know what I mean? I was just thinking about that setup. If I was honest with myself, canceled everything. Took another trade or two. I was down like $300, small, but I was out. I just started taping my hockey sticks and I went to play hockey. So for today's session, they've given you the context of what we have. We've come in overnight into the, from the prior day high, we've sold off. The overnight high is about 15 points lower or 12 points lower than the overnight high. We broke below the prior day close on the overnight. We rallied above it. Now we've come down below it. So we've set the overnight low where or close to the opening range was. So what this kind of tells you is this 67.92 to 6,800. This is a must hold, and it already has held it overnight on the overnight session. But if this sell-off that we're seeing happening now comes in here and holds, you have one more shot at the long side. Below 6,895, all bets are off. We're going bearish. And I'll tell you what I don't like about this. Didn't mean to show you that. Let me see what I showed you here. Nothing really. But let me switch the screen. All right, there you go. You can probably see this. I don't know why the live banner is not showing. Who cares? Oh, there we go. Wait. There we go. All right. So let me turn my camera off too because my face is obstructing what I want to show you. So here's the thing. Yesterday, the rally in the room, we were saying, up to about 68.50 it has legs, and then about around the 60 to 70 you got a lot of resistance to that trade. So don't get too excited, and the reason we picked those levels is based on these volume profiles, which I'm using the trackpad and it's very sensitive, but we saw a lot of accumulation here of these auction lows, and then also value area lows. That was the 80 basis level, and then the 50 there was a bit of a drop off in volume, which has now since been filled. So this is a resistance. Value areas migrated lower, and now they're starting to migrate higher. Like if we get down below the 6,800, you could see it here. Then we're kind of out for like 67.80, 67.50, maybe even lower than that. We kind of have to hold 6,800 here. All right, to like 67.95, this area. That has to be the springboard to higher prices, or it's just a continuation lower. That's that. You guys have any questions for today? I went way over. I did a nice long one for you, but hopefully you enjoy it. Do you enjoy these updates? If you don't, then Bob's your uncle. Some guy actually one time told me I have an uncle whose name is Bob George. So when you use that analogy, it's kind of funny. I think you're talking to me. What is the origin of Bob's your uncle? This is something we must find out. Awesome, man. Thank you. I appreciate it. We got the usual suspects here, and I appreciate you guys. MS, OTM, you guys are here for the long haul, and everyone else as well. LeVar Williams, hello, my brother. I hope you're well. J-Rad, thank you as well for the comments, the support. And everyone else watching too. We're going to continue to do these, and I think the screen share enhances a lot of the value that we add. And I'm always going to be truthful with you guys. Sometimes I don't have good days, and these not good days are good to talk about. And I'll never kind of hide that from you and make it seem like everything is sweet all the time, because I think challenges create the uncomfortable times, and the uncomfortable times challenge you to push yourself and stretch your comfort, become stronger and better. So there's my little Tony Robbins piece. Bye guys, love you a lot. Have a great rest of your day. I'll see you tomorrow. Watch for this market around 6,800 for some support. I don't like that we have lower highs right now in the overnight compared to yesterday's session, but let's see what we get down to 6,800 for the first test, and we'll go from there. Take care. Have a great day. I'm going to see you tomorrow. Enjoy your day and afternoon. Goodbye. Thank you, Elizabeth. Thank you, J-Rad, as well. Thank you, everybody. Ciao.